In recent months, it's come to light that Shein is considering an initial public offering IPO on the London Stock Exchange. Now, if it goes ahead, it could be the UK's largest IPO ever. If you're looking for more information, keep watching. Here's everything you need to know. First of all, what is Shein? Well, Shein is a Chinese online fast fashion company known for selling trendy clothes at rock bottom prices. It has become the world's largest fast fashion retailer. Across the world, Shein's been around across the world, Shein has around 90 million active shoppers today, many of whom are in the US. In 2023, the company generated an estimated $32 billion in revenue, and that's about 40% higher than its revenue in 2022. Last year, PitchBook valued Shein at $66 billion, and that equates to roughly £52 billion at today's cable exchange rate. So we're talking about a big company here. If it was to proceed with an IPO on the London Stock Exchange, it would be bigger than nearly 90% of FTSE 100 companies listed at the moment. So when is the Shein IPO likely to happen? Well, at the moment, we don't have a date for the Shein IPO. In fact, we don't even know for sure if the IPO will take place. It could come to nothing. So many do when there isn't an appetite or market conditions change. We're likely to get more information on the IPO soon, however, and if it's confirmed, things could happen very quickly. There's likely to be quite high demand. So how can you access the Shein IPO as a retail investor? Well, because the Shein IPO is not yet confirmed, investors can't apply to buy Shein shares yet. However, there are steps you can take to prepare to participate in the IPO, particularly seeing as Primary Bid has discontinued their app and effed off to France. Now, one smart move is to register for IPO alerts with a few major brokers, such as Hargreaves Lansdown, AJ Bell and Interactive Investor, who participated in the Raspberry Pi IPO. Another good idea is to open a brokerage account so that you can potentially buy shares if the IPO goes ahead. You can buy them in the market afterwards, but sometimes there's a pop. But will the Shein shares be worth buying in the IPO? Well, this is the $1 million question. Nobody really knows. It's really up to you. If you want to have a punt, have a punt. The IPOs of large, well-known companies do tend to generate a lot of excitement. As a result, the share prices of these companies often soar after they go public. Arm Holdings is a good example here. After it listed on the Nasdaq in 2023, its share price shot up by 25% in a day. So that would have been a particularly good stag. Stag is when you go in the IPO and sell it on the day. But there's no guarantee Shein shares will pop like this. However, in the past, the retailer has often been criticised for its environmental impact and potential use of unethical labour practices. These issues could limit demand for the stock, with those who focus on ESG issues sitting on the sidelines. It's worth noting that there are reports that institutional investors are wary of the potential IPO due to these ethical issues. One other issue to be aware of with Shein is that it operates in a very, very competitive industry. Its rivals include the likes of H&M, Zara, Boohoo and ASOS. A lot of these have been poor long-term investments. Boohoo shares, for example, have lost around 80% of their value over the last 5 years. Of course, there is a chance that Shein shares could soar in an IPO. After all, this is a fast-growing company that has state-of-the-art technology. However, gains are not guaranteed, so investors, you should do your own research before making any decisions and not blindly jump into the IPO just because everybody wants to get involved. It doesn't necessarily mean you should get involved. Not investment advice.